Hey, what's going on, guys? Welcome back to the channel. This is MF Dividend Stocks. I'm your host, Joe. Let's get it. We're up to 33 subscribers. That is so amazing. I'm going to try to keep this short and sweet at this point. Thank you guys so much. If you want to subscribe, if you like the content, give it a like. And check out the other videos on the channel. Also, links below to other things like Twitter and all that good stuff. Webull, Robinhood, a whole bunch of stuff for you guys. Check it out. All right, profiles. We lost 26 today. We're gonna go over this real quick, and then we're gonna go over my plan and update you guys on what's going on. But we're gonna do kind of a quicker version because I'm gonna talk about a couple of stocks that I changed and did some good stuff with. Over the week, we did negative 107.3, which is not big because we got a lot of stuff on sale and it dropped down even more, so we could buy even more stuff on sale. Over 3 months, we're still up $149. And if you look, there's a lot of money that's been put into this. So what I'm thinking is that we're going to get a nice return later. This is going to go higher when the stock market starts to catch up. All right, so quick checkout. This is how the portfolio stands right now. So I figured this would be a good chance for like people that are new to this or coming into here. And even for myself, to kind of keep records of stuff. And as you guys come along my journey, I'm not telling you this is how you should do it. I'm just telling you this is my journey. And if you take some of the information from it, that's cool. If you take some of the information like, wow, I wouldn't do that, that's also cool. If you like the journey, make sure you subscribe so you can see more. All right, so overall, I would say overall this is kind of like a little bit of a risky portfolio. But we're going to get into like some of the things that I did and why I did them as we go down real quick. A lot of this stuff is scattered because we like at the end of this year is when we'll have our true portfolio for you guys to really check out and judge. This is kind of like I'm throwing some stuff, throw it against the wall, see what sticks. If it sticks good, I'm keeping it. If it does bad, I'm getting rid of it, kind of thing. All right, so we're up to like $110. Which this is not the true story, because if all my stuff was in dividend stuff or people that didn't cut dividends, this would probably be a little bit higher, which is awesome that it's this high already in just over a month. I think that's pretty cool. Let me know what you guys think. Overall, it's like around 2,000, like a little less than $2,000 I put in, and with the profits, hopefully it's going to be like 25, 26 at least, maybe the next upcoming year, and hopefully we'll close in on 10 grand by the time this year ends. We got Comcast, pretty good. We got 8 shares of that. Nothing changed with that. Still a nice safe dividend. I know it's a little bit low, but it's a nice safe dividend again. I wanted to get into something that was nice and safe. Comcast is one of the things I picked, and it's doing pretty good. Emerson, I got in there kind of low. The dividend's not too bad. It's a little bit higher. So over the year, as I put some more money into it, it should be a pretty good dividend too. Its safety score is 78. Looks pretty decent. AT&T, I got a kick on that, and it was like the right price when I had money to buy multiple ones. And all these shares should, the bigger shares, like the 30s, the 40s, the 50s, these should all be like 20 or 30 shares by the end of the year, maybe even higher. But when it kind of works out right, I wasn't even thinking about AT&T. One of the subscribers suggested it to me. I looked into it a little bit. It's working out pretty good. I got 13 shares at $29. It's right around that spot, 29. So it hovers around there, goes up a little bit, comes down a little bit, but staying pretty solid right there. 6.99 dividend yield average over the last 5 years. We got good money in it. Safety score is 65. It's growing a little slow. Annual income is 27, so not so bad. Wells Fargo, same thing. This is just on sale. I don't think Wells Fargo's going anywhere. This stock could be like $50. I'm pretty sure. This dividend, it's kind of high, the dividend yield, but it's growing fast, and another $27. This is where most of my money is coming from, these two stocks right here. So that's okay with me right now. There's tons of stuff to not say to teach you my plans for the end of the year. This is because we're in a down market. I'm taking a little risk and see what happens, because everything's kind of like on sale. So if you keep buying the ones on sale, as long as they don't go out of business in a few months or a year, maybe 2 years, depending on the stock, you should see rewards from it. Synology, this is a credit card company, 53. It's right there. Like, I don't love the like anything lower than a 55, but you take some risk for some reasons. It's growing very fast. That's only giving me $2, but I have nothing in here. It's only 1.7% of my portfolio, and it's a credit card company. and a real financial crisis. So I'm not sure how much I want to put into this one, but I wanted to see what would happen. Iron Mountain, pretty good. Just got into it the other day. We got for 23. It's around 22. Not too bad. I think I might have punched some of these numbers in wrong when I looked at it, but I think most of these it's pretty close. Everything's pretty much down, so it doesn't really matter. But at 11%, 5 years, this is pretty risky, I would say, at 40%. You don't want the dividends to get cut, but with a total of 68 bucks in it, it's not too bad. And hopefully if some of these people cut or they suspend the dividends, they'll be back. We're trying to build up a solid portfolio for up to years to come. This is going to be a work for like 10 years or so. This ain't going to be something that's going to be done overnight. I'm going to be a millionaire. But hopefully I can put some of the foundation pieces in here with some of these companies. Some of them are going to make money. Some of them hopefully are foundation pieces, because things like I would think Wells Fargo, AT&T, Emerson, Comcast are going to be around for a long time. They're not my rocks. They're my stock picks. There's going to be ETFs in here. There's going to be a lot of solid things that's going to build this slowly over time. Just not right now, but we'll be making a change. Aurora Cannabis. That's just to see if I can make some money off it for fun. I had some extra money when I was buying stocks, and I was like, yeah, let's throw some more at this. Then another time I was like, let's throw some more at this. If I lose the money, if not, I double the money, I'll take it. I'll buy some Synology with it, or Wells Fargo or something with it. Same thing with Camp. We just threw some money at this. It's actually doing one of the better ones. It's up 39% already in the gains and losses. So with that one could be turning into a dividend stock soon. Carnival. I don't know what's going on with Carnival. I did this for the Double Your Money challenge, just like the Camp and just like the Aurora Cannabis, if I didn't say that. Shorter Communications is a new one real quick. Got that for 16. That's a risky, on the risky side, but I wanted to try it out. We got 97 bucks in it. If I had like 300 bucks in there, it'll be like $15, $16 maybe, something like that. So I might be buying more of Short Communications. I kind of like their plan. But with Carnival, I don't know. If stuff gets back to normal, this is going to be a really good stock. But this was for the W money kind of challenge. This should double my money. I should be able to hold this with no problems. If this drops low, I think it was down to 11 or something, I think I'm just going to throw more money into it. Ford, I got rid of GMC. I was going to sell all the car companies. Then I had a change of heart, but GMC already sold. I didn't want to buy GMC back. So I wanted to hold on to Ford because Ford didn't sell yet. I'm going to probably get like 20 or 30 or 50 or 100 Fords. Ride them out for a while. And when I would say retirement's near, I might even have more, but at a certain point of when I'm near my early retirement, that this is all happening in 10 years, 10 to 12 years. So it's going to be a fun ride. And this is one of the many things, I want to say many things, one of the couple of things that I have. It's not just this profile, but this is what I'm going to try to teach you guys, not teach you, show you as I'm trying to do this, that in 10 years you can set yourself up pretty good. 10 to 12 years. It's supposed to be 10 years, but I might still be at this point in 12 years, so I might just add more to it, obviously. But it's really a 10-year plan. Diamondback Energy. We got 3 of those. They're looking pretty good. I like Diamondback Energy. If you guys don't know, definitely look into it. It's growing really fast. This, when it's back to its normal thing, it's up to around 60 to 80, I think it is. I can't remember off the top of my head, but this might be a good earner. It's not the highest dividend, but you can't take risks with everything, because if you take risks with everything, then when something goes wrong, you're screwed. And these companies are good. I have another energy company that is through my work that I don't want to talk about on social media, because they have social media rules and crap, so I'm not leaving them out, but they're a pretty good energy company. Groupon is just for fun, so that helps up. Oh, I know it hurts. You guys are going to kill me on. But I'm like, I was just doing it to try to double my money. I actually got in here. Cost per share was 6. I think I messed that up when I wrote it down. It was $6.19. So I lost at least half my money. I want to see what happens with the bankruptcy. I know what's going to happen. If I just lose my money or they come back, I kind of just want to buy more stock for fun. Not a lot. I got 4. I was thinking about buying another 4 at $3. Or another, save me another 10 or something. Sorry, another 10 or something. Just to see, because if hers can go back up to like a 9 or a 10 or a 12 or something, that would be nice to just, you know, even if I'm getting like $50, $60 and sell it, I'm happy. New York Mortgage Company, same thing. New York Mortgage Trust, I think it is. It's the same thing. I was just trying to double my money for fun for a video. This could be a real good stock if they bring back the dividends. Not a real good stock. It could be a good stock, solid stock if they bring back the dividends. Very risky stock. I want to go nuts with it. Dave & Buster's is something I'm taking a chance on. I like Dave & Buster's. I like video games. I like playing fucking shit. Their stuff is directly correlated with the virus. It looks like it was doing pretty decent other than that. So, I don't know. I'm just going to hold it and see what happens. It's going lower. I might buy more. I don't know. I'm not going to take a huge stake in this because I guess anything can go away. But hell, just take a chance. SPHD. It's kind of like the one ETF that I'm putting money into right now. I feel good about this stock. It's 20% of my profile. I don't think there's a lot that's 20%. Something close, probably 18 or 16%. But there was a plan to have a whole bunch of ETFs in this, like 4 or 5. But I might not be getting them for a couple of months because a lot of the ETFs are expensive. And I'm still trying to flush out like some of the companies that are part of these ETFs because some of them are big companies. And I'm trying to come up with a good plan with maybe to have 3, 4, 5 ETFs maybe in my portfolio, and then maybe 10 to 20% stocks. And I'm going to mix in something. I don't know if it's going to be bonds, but there's going to be something else in there. It's going to be a solid plan going through, or a solid transfer in a couple of years or something. All right, guys. So we're up to 119 shares. With most of this bloated, we're probably really at like 40 or 50 shares that are good. 2021 $21. They were 2% for the day, 5.17. It's a decent average. It could be higher, yes. It depends on my risk to reward ratio, and some of these things are already giving dividends like they're supposed to. But with that being said, to have $110 a year off my first month, that's pretty good. If I could do something like that, that's going to go pretty well. If I could do that every single month, that means I'm getting $100 a month my first year. So let's see what happens, boys. Thank you so much for watching. Don't remember, rate, comment, subscribe. I'm at 33. Let's get me to 34, 35 or something. Please do it. Yes. Thank you so much for watching. Later.